Every empire meets its breaking point. Today, old money meets old problems, runaway debt, historic inflation, and central banks printing with abandon. The US national debt just blew past $37 trillion. Global debt servicing alone is burdening economies. That's money being drained, not invested. Inflation, once dismissed, is embedded in global policy. Every crisis in 2025 is layering pressure on fiat, and Bitcoin is the only asset scripted to win. Look at the charts. Post-halving patterns show a consistent bull run beginning 12 to 18 months later. The 2024 halving happened on April 20th. That places the next bull peak squarely in mid-2025, exactly when central bank policies start to show cracks. With Bitcoin annual issuance slashed by 50%, demand pressure is intensifying while macro stress accelerates. Tech-savvy institutions are waking up. MicroStrategy just added another billion to their Bitcoin stack in Q1 2025. BlackRock's Bitcoin ETF continues to attract billions in retail allocation. On-chain flows show institutional wallets swelling, whales stacking in anticipation. They're betting on storm-proof assets ahead of currency resets. Turning to macro, geopolitical risk is elevated. US-China tensions, crypto bans in emerging markets, and sanctions regimes across Russia are fracturing global trade. In such chaos, capital flees towards decentralized, borderless safe havens. Bitcoin offers migration in the form of code, not paper. Inflation data hides more than it reveals. Official CPI is stuck between 4 to 6% globally, but shadow inflation, asset inflation, is closer to 15% once you include housing, food, and real estate. Central banks know this. That's why modelers are openly discussing negative real yields for another 24 months. Cheap money fuels asset inflation, and Bitcoin rides that rocket. Next, consider Bitcoin's energy narrative. Clean energy innovations unlocking grid reuse, long dismissive critics are reversing course. Renewable energy paired with Bitcoin mining is becoming a market solution for stranded assets. When renewables go idle, Bitcoin mining revs up. This synergy builds a virtuous cycle, economic utility meets environmental purpose. Regulatory headwinds? They're turning tailwinds. SEC approvals of spot ETFs in the US and regulatory clarity in Europe and Canada signal mainstream acceptance. Macau amp forward-looking nations like El Salvador, which in 2025 rolls out national Bitcoin payroll options. These moves reduce friction and increase demand. Now, let's dive deeper. Bitcoin's network effect is compounding. Developers, miners, nodes, wallets, all growing. Lightning Network usage is up 300% year-on-year. Merchant adoption isn't niche anymore. Big brands and e-commerce platforms are integrating wallets for micropayments. Every new user plugs into the ecosystem, demand grows like clockwork. Compare this to gold. Gold is heavy, illiquid, perceived safe haven but trapped in vaults. Bitcoin is mobile money and code. It travels globally in milliseconds, without permission. In 2025, that digital mobility meets physical instability, perfect storm conditions for Bitcoin's ascent. Here's the kicker: timing. Traditional markets peak as too much liquidity floods in. By mid-2025, Fed, ECB, BOJ may end their zero-rate era. Yield hunters will flock to alternatives. Bitcoin, with a known supply, fixed issuance, and skyrocketing demand, will shine. Whales who accumulated at sub-$30K prices are sitting on unrealized gains. They're not sellers, they're waiting for the spotlight. So what's the path? Here's my macro Bitcoin forecast structure. First, Q1 to Q2 2025. Accumulation phase, institutions and whales quietly hoard. Then Q3, Federal Reserve starts hinting at tightening, volatility jumps, price stabilizes. Q4, liquidity withdrawal triggers rapid rotation into Bitcoin as a hedge. By late Q4 or early 2026, we test all-time highs, and depending on momentum, we run to new price discovery territory. $200K is now in range. That model isn't hype, it's pattern reality. It's where history, technicals, and global policy converge. If you're holding cash or bonds, you're holding tomorrow's losses. Bitcoin is deflation-resistant code money, a protection layer. So what should you do? First, define your risk bucket. Only allocate what you can handle long-term. This isn't a fast buck, it's strategic insurance. Second, average in. DCA is not a cliche, it's how institutions ramp in without triggering market moves. Third, learn the tech, exchanges versus hardware wallets, self-custody, lightning channels. Your sovereignty matters. If everything unfolds as it should, halving cycle, macro resets, digital adoption, we're looking at a paradigm shift in 2025. Not just in price, but in global perception, Bitcoin moves from niche digital commodity to essential digital asset. It's a financial turn stitch for a system on the verge. In the end, 2025 isn't just another cycle. It could be Bitcoin's breakout decade, setting the stage for the next stage of global money. Strap in, stay smart, stay ready. We're on the brink of something historic. Don't miss this window. Like, subscribe, share, and stay tuned for more macro crypto breakdowns.